not only for themselves, but for the entire state.
That's an interesting kind of where a major city makes a decision which affects us out here.
Yeah,
So,
yeah. And, but no, I had, actually, I had a bill that we heard in my committee that limits a city's general tax levy authority to the amount of rent increase they allow in a rent control ordinance. And because, oh, you just can't do that. Well, yeah, you've done it to others, you know. But anyway, I think they're trying to figure out a way to get out of that and may allow some types of things to happen. But actually, they tied it up pretty tight, so we'll see what happens.
Well, but thank you.
You bet.
I'll turn it over to Jeff if you have a couple of things too.
All right, well, the mayor hit on LGA, and again, I appreciate your support for that. Sat in a webinar on Friday, and they've got competing formula computation, so I guess obviously we always can utilize that here locally, and it's a huge part of our budget. I did have an opportunity to testify a couple weeks ago to a subcommittee on funding for redevelopment grants, and that was such a huge part of our project downtown here, the Stone House. We took out blighted properties, put tax generating property on, created new jobs, city match 50-50. It's a great program.
Mm-hmm.
You know, it's really been a great success, and we've had a chance to brag about our Stonehouse project, but obviously hoping you can support that as the journey goes forward. We always monitor this right to the last day and then some, and hope that some good things come out of it. Obviously, I think both the county and city level always appreciate your support.
You bet.
Thank you.
Very good, yeah.
It's coming the other side, Bill.
Say, just talk a little bit about PFA funding and the bond. Adjutant here, I'm the city clerk. We recently were presented with a finance package. We went round up USDA for a water sewer project. But in terms of the size of the package here is significantly less than what we're really hopeful for. So my question is, projections, PFA moving forward here, do you see a significant increase in funding opportunities for PFA?
I think that is one element that the chairman has indicated, making sure that there is plenty of money in there in PFA. Now, what his definition of plenty is, he hasn't given that to us yet. But certainly that is going to be a major part of the funding of the bonding bill, is for PFA.
And then have you heard of anything trickle down through the Build Back Better at all through the state in terms of infrastructure at all?
We really haven't. There's so many rules that have to come out from the federal government as it relates to any of those dollars. And none of those are out there, and in many respects, no one's entirely 100% sure of what it can even be used for, at the end of the day. For example, they talk about transportation. Well, and there has to be a matching of funds in order to get that. Well, that's fine. But of the $6 billion that I think would be available to Minnesota, we'd have to put in somewhat like 1.234 billion, which is fine. But actually, we're already scheduled to get between $3 and $4 billion of that money, even under normal circumstances. So I still think, at the end of the day, that probably putting in the match is the right thing to do. The only thing you got to remember is every time you put in match money to get the federal funds, now you got to live with federal rules. And so that will deplete many of those dollars to comply with all the things they want you to comply with. And so, but like I said, right now, we're still waiting to see what all the rules are.
Sure.
Yeah. You bet.
Any other questions? Tyler, now's your chance.
Do you foresee anything about, mental health is a big problem
Yep.
as far as the jails, law enforcement in general? Is there any bills or anything dealing with mental health and the law enforcement aspect?
I know that there is, I know that part of the package we've put aside or designated for mental health in the Senate that law enforcement is there. I just don't know exactly what elements they're working with in that respect. I think everyone's aware of the fact that, our county law, all law enforcement people are having to deal with mental health issues for which they're not trained. And I think most of it has dealt with trying to find facilities that, number one, are closer, that you have to spend less time transporting people who have had some violent activity together with their mental health issue. You know, beyond that, I don't have a lot of other details for you. But, and at this point, like I said, where it all shakes out at the end of the day is anybody's guess. So.
Any other questions?
Just a comment again, Senator Weber, you commented about how accepting federal money, federal regulation and so forth. We saw the same thing, and again, I really appreciate what you did for us a couple years ago with the bonding bill, trying to get our dental facility here. We certainly appreciated that, but that was the exact same scenario there. No. Because of that, where it fell into deed and so forth, it was, and I felt so bad that we couldn't accept the money that you worked so diligently to make us appreciate that, but it just didn't happen. The good news is that building has been built. In fact, they're going to be opened up here in about 3-4 weeks. He's got staff hired. He's got 2 dentists hired. He's got 2 hygienists hired, 2 assistants hired, and 2 office assistants. And in fact, they're putting the trim work on today. They've got the floor in and paint and so forth. So it is coming along. But I just wanted to acknowledge that we certainly appreciate what you did for us.
Welcome.
And wish that the rest of the state requirements would have allowed us to proceed the way we thought we were going to.
Yeah. Yeah, the state manages, they provide a lot of funding for a lot of projects and then put in rules that just negate much of what we provide.
It would have cost a third of what the grant money was, and that was just ridiculous. So.
Yeah. I hear you.
But it doesn't mean we don't appreciate what you did just the same.
You're welcome. Thank you. So.
Well, if there's no further questions from anybody, I want to thank you, Senator Weber, for showing up today.
You're welcome. Glad to be here. And when the session gets done with and we know what happened or didn't happen, we come back and visit with you again. Okay.
Appreciate it.
You bet. Take care.
I don't see that much of you anymore.
No. You used to see you in the backyard once in a while.
Yeah. Okay, thank you very much, Senator.
Take care.
Want to take a couple minute break?
Yeah.
Here we go.
Okay.
All right, I'm good. Thank you.
Come on up, ladies.
So we have Jamie from Ide Bailey, and she's here to kind of go over the 2020 audit.
Read the whole thing to us?
Yes, get ready, buckle up. I love numbers and we're going in deep. It's 90 pages, so.
I was a math major in college, so bring it on.
To be really ironic, I'm terrible at math. Excel does it all for us. We don't. My husband just shakes his head anytime I have to do math because he said it's embarrassing. Well, good morning. I'm Jamie Fay. I am a partner with Ide Bailey out of our Mankato office, and I have been working with Pipestone County on the audit for 4 years now. Well, with 2020 being the 4th year. I know we're in 2022, so it's a little confusing. So we're talking today about December 31st, 2020 year end. This is actually my first time physically being at Pipestone County, so thank you for the hospitality. I've had a great chat already this morning, and so it's been great. So really what I want to do is just kind of step through the financial statements, just some high points. I'm not going to get into a lot of the minutia. If you have questions, if you've read something, go for it.
Page 1.
Page 1.
Bruce Koyman is no longer on the board.
Got it.
He wasn't 2020 audit.
20 though.
2020.
That one he was.
You're going to have to rewind your brain just a little bit. Yeah, so keeping in
This
mind
doesn't
that
concern me then.
this is 2020 stuff.
I know, me neither. Why are we here?
Right. Let's all go home. It's fine. So we're looking at 2020. The big things in 2020 was the beginning of the pandemic, CARES funding, all of that kind of came up. So just jostling your memory just a little bit. All of that was new. So the first thing I want to look at is really page 2 to page 4 of the financials. This is what's called the auditor's report. This is where we come and say, hey, here's our results of the financial statement audit. You received an unmodified opinion for the financial statement audit, which is what you want. That basically says we looked at your stuff, we sampled some things, we did some calculations. They are materially accurate. We don't look at every dollar. We don't look at every transaction. Quite frankly, we would become a member of your staff at that point. So from what we looked at, everything's materially accurate. Called it good. You can still have findings and have a clean audit opinion and those types of things. The other thing to kind of point out, there's something called an emphasis of matter paragraph in here, and I'm not going to read it in the technical language. Basically, all it means is there were some activities in the past that they were reported as what's called agency funds, and now they are reported as something called custodial funds. There was just a change in standards that required that. So there's an emphasis of matter saying, hey, we changed some beginning balances to reflect that. Again, that didn't result in any kind of modifications of your opinion, but just something to point out. And I've got a little bit of detail further in the report on what those are specifically for. So pages 5 and 6, these are what we call full accrual statements. These include basically all of the county activities and the governmental column, and then the business type activities really is the health center. So this includes things like capital assets, long-term debt, pension liability, other post-employment benefit liability. Those really aren't things that those two things aren't really things you really take into account when you're budgeting on a day-to-day basis. So I tend not to go into too much detail on these statements unless anyone has specific questions on them. What I tend to focus on are more the fund statements. So if you go to page 7, that's really what I like to call the fund statements. That's where I want you to draw your focus to, because that's really kind of more on this is really showing us how we're operating, more on how we budget. This shows cash and investments, any short-term like receivables, inventory, short-term accounts payable, or anything like that. So you can see the general fund is in its own column, and then the road and bridges fund is in its own column, and then there's a column called non-major governmental. So for reporting purposes, based on a threshold, certain funds are considered major that have to be broken out here, and other ones kind of get lumped together in the back. So we will go over the detail of those non-major in a little bit, but for now, just know that they're kind of lumped. So really the thing to point out here is cash and investments is about $10.2 million between all of the activities for the county. And then if you go to page 9, that's really where you can see the revenues, the expenditures, like how in the for-profit world you call it an income statement. What does that look like for the county? So overall, if you look at the net change in fund balances row down a little further, you can see the general fund had a positive change of about $420,000. All the way over to the right, the total for the whole county was about $91,000. So a positive increase, and I would say in the first year of the pandemic, 90,000 is pretty dang close. You have a $10 million, they call it fund balance, which is kind of what's left over at the end of the year. There are categories in that fund balance to say some of it's restricted. If you go back 2 pages, you can see part of it's restricted, part of it's assigned. So kind of the unassigned part of it is only about 3.3 million of that 10 million. But that's really the kind of the bottom line. So if you were thinking about kind of your checkbook and you say, okay, I've got all these things, whatever is left over is kind of that last number. Any questions on those statements? Nothing there. Okay. The next couple statements, so pages 10 through 14, those have to do with the medical center. I don't do much with the medical center. We have a separate audit group that does that, so I wasn't going to go into detail there unless anybody had any specific questions there. Okay, excellent. So the next statement I want you to look at is page 15. So I said in the beginning that we had some funds that we were kind of reclassifying this year. So they're called Fiduciary Activity. So it's the Lincoln Pipestone Rural Water System. It's the State Revenue Fund, the Taxes and Penalties Fund, and then Buffalo Ridge Task Force. So these dollars, what they are is the county is essentially kind of helping manage some of these funds, but not necessarily in charge of them. It maybe money comes in and it actually belongs to this other place. So you bring it in and you pay it out That's what state revenue is. You know, you collect on behalf of the state, you give it to them. This new standard said, hey, you actually have to report those ins and those outs. So on page 16, you can kind of see the details. So like for state revenue, there's about $1 million that came in taxes, and then a little bit with licenses and intergovernmental. And then the payments going out were exactly the same as what came in. So really for state revenue, you shouldn't hold anything in those. And so these funds kind of operate that way. The only one that is a little different is the Buffalo Ridge Task Force. That one doesn't necessarily net to zero at the end of the year, but it kind of operates the same way. The county is just kind of holding it for someone else. They tell us how to spend it, and it kind of goes in and out. So that's what those accounts are for.
I know for that one, we are the physical agent.
Yes, yep. So physically you hold these dollars, yep, in the county, but you're like the board couldn't go, okay, we're gonna use it all for this project. It's really for that other entity that you're just kind of holding it.
I heard it described as pass-through. Is that an accurate way of describing
Yep,
it?
yes, exactly. Yep, so it's kind of like a pass-through. So I think about it in terms of like personally, if I was gonna do a fundraiser for the American Heart Association, I would get the money and give it to them. Well, it's never really been my money, but it's gonna show up in my checking account going in and out. Same kind of thing. Yep, that's exactly right. So those are really the numbers statements kind of in the beginning. The next thing I want to draw your attention to is if you go back to page, I'm going to skip over all the pension stuff because that's really kind of confusing. If you go to page 59, these are the budget to actual schedules. So really just looking at what did you think would happen compared to what happened. So for December 31st, 2020, this is the general fund on page 59. The final budget for expenditures was about 8.7 million. You spent about 9.8. So there is a little bit of an overspend. You also got more in for revenues than you expected. So if you look at that total revenues line, you got about 1.5 million more than you expected. A lot of times my governments, I work exclusively in the government world. Most of my governments conservatively budget for revenues. And then expenditures are kind of on a case-by-case basis. Sometimes they're very conservative. Other times they're saying, hey, we're going to try to cut expenditures, and those are a little over, but kind of just depends on budgeting strategy. But that's where it kind of came out, and you can see kind of the different categories there. And then page 60 is that same kind of analysis, but for the road and bridge fund. So expenditures were expected or budgeted to be about 7.7 million. They were actually about 9.7 million. So a little bit of an over budget spend there too. Now you can amend budgets throughout the year. Some counties choose to, some counties choose not to. Really from our purposes, when we come into audit, we just make sure that there's an explanation. So we would come to the office and say, hey, it looks like you spent more than you expected here. What happened? Oh, well, we had this project come up. We didn't budget for it. Okay, great. I have had instances where I'll go to a government and I'll ask that same question and they'll say, well, we just kind of threw numbers in there. They were last year's numbers. That was what we budgeted. Those cases tend to be ones that we have a further discussion of like, hey, let's look at our budgeting process. But for the most part, usually we get answers like, hey, something was unexpected, or we used last year as a baseline and tried to adjust, but we didn't quite go up enough.
Could be just timing of projects.
Yep, timing
Maybe it
of
didn't get
projects,
done last year. And
Yeah.
Then it got done this year instead.
Yep, yeah, that's a big one. And so like if you were planning to do some kind of road project, and especially right now, if you're not able to get the supplies, pushes it back. Yeah, as long as we get some kind of explanation, we're fine.
Road and Bridge, it's very possible that we probably got 2019 money paid to us in 2020 from road projects.
Right.
Is that possible? I mean, you take a look at that too and say, okay, you got this, we get a boatload of state money.
Yep, usually in those cases, we try to account for that
Yeah.
with the receivables and the payables.
Okay.
To say, hey, if it relates to 19, we'll record it in 19. But depending on the timing of the payment, it maybe didn't get
Okay.
into revenue. Because if it doesn't get receipted within 60 days of year end, then it doesn't
Sure.
get into that year. Yep. So like we'll say at December 31st, 2020, if the state owed you, well, for round number purposes, if they owed you 100,000 for a project, but they didn't pay it to you till June,
Right.
it would not be in these numbers. If they paid it to you in February, then it would be in these numbers because it would be within 60 days of year
Sure.
end.
Okay.
Yep.
That makes sense.
Absolutely. So those are the budget to actuals on those. The next detail that I want to show you is really that lump of non-major governmental funds. So if you go to page 71, So these funds are family services, ditch, and then medical facility bonds. Really nothing to point out too closely here, except for if you go to 72, you can see kind of that net income page. So this is the statement of revenues, expenditures, and changes in the fund balances. So overall, an increase in fund balance of about 220,000 between those three funds. These are the three that are in that one column in the front statement. So you can see what that looks like. And then the budget to actual for these three are on the next 3 pages. So for Family Services Fund on page 73, the expenditures were about $65,000 less than budget. For the Ditches Fund on page 74, expenditures were about 6,700 more than budget, so just a little bit. And then the Medical Facilities Bond Fund, that really only for expenditures only has transfers, so that looks a little bit different. Transfers were a little bit less than expected, but since it's not actually expenditures, it doesn't usually rise to that level. So that is all the numbers. Does anyone want to revisit any of the numbers? Like really dig in and calculate some things? No? Okay.
Are you disappointed?
I am not, no. I like the other stuff way better. Okay, so, I lied, there is one more. Page 81, but it's really quick. So page 81 is what we call the CFA. So it's the Schedule of Expenditures of Federal Awards. What that means is this is the listing of federal dollars that you spent. So in our world, if you spend more than $750,000 of federal money, so think CARES funding, kind of those federal programs, you have to get a separate, it's called a single audit. So it's more of a compliance-based audit. We look specifically at a program. We say, did you spend this in accordance with the agreement? Did you ask for the money the right way? Did you fill out the reports the right way? Did you pass it to the right people? So that really is what we did here. So the county did spend about 1.4 million, 1.3 million in federal expenditures. A majority of it was CARES funding. So you had the Coronavirus Relief Fund. You spent about 1.2 million in there. So we looked at that program specifically. We took all of that money that you spent and we tested for making sure the costs were allowable. We tested to make sure that the reports that you filed with the federal government were right. And there was some money, there was about $244,000 that was passed through to subrecipients. This would be things like counties or cities, townships, school districts, nonprofits. So in that, we did some testing to make sure that you did some subrecipient monitoring. There was one finding that came out of that. So on your federal audit, so if you go to page 83, this is kind of our summary of the federal audit to say, hey, we tested for the federal expenditures. What did we find? Here's what we have. There was a qualified opinion on the federal testing because of that subrecipient monitoring piece. So when you pass money to a school district, there's requirements that the county checks in on that school district and says, are you spending it like you should? Give me some reports to say, or backup, or kind of doing some monitoring of that. We had worked with Tyler on this program because he was here at the time to test that. And he said, we really didn't do that. We assumed that was their responsibility. So that piece of it didn't get done, that monitoring. We're not saying that they spent it in the wrong way. We're just saying, hey, the county didn't check. We had to report that since that didn't happen. So that's where that qualified opinion comes from, because that is a material amount to the program. So that really is the one thing that did come out of the testing that we did for federal. We only tested that CARES funding. So that was the one finding. And if you go to the very last page 86, that is really where we step through the details of that finding, saying, hey, there were funds paid to a government. There was no subrecipient monitoring. Here's kind of the discussion about it. Any questions on that? With all of this CARES funding, there's a whole bunch of entities right now that are getting single audits that have never had them before. The county had one a couple years ago with a project, but typically doesn't have a single audit. So it's not uncommon to find things like this when we do these kinds of programs, especially with the CARES funding, because there was so many kind of odd things that went through. Other than that, the other findings were related to preparation of financial statements, which means you hired us to prepare the financials, which we usually see, in the material journal entries. Material journal entries just means we made some entries to make the financial statements materially accurate. Again, those two are very common in the governments I work with. The third finding that did come up, it was a Minnesota legal compliance finding, and it's spelled out on page 85 if you want to see it. But essentially what it means is the county is required to have a certain amount of pledged collateral at the bank, and that just didn't happen. A lot of entities that I work with just assume that their banks are handling it, and usually they do. In some instances, things get missed. Maybe a bigger payment came in than expected, so there just wasn't the collateral in place that should have been at one of the financial institutions. I know we talked to Tyler about it at one point, so there was some discussions about that. So usually, if you bring that up to your financial institution once, they get it on their radar and they say, okay, we're gonna keep closer tabs on this. But just something to be aware of. That's a Minnesota legal compliance thing saying, hey, there's a state statute that said you had to do this, you didn't. So that's where that came from. But overall, we worked with Tyler very closely. Once Tyler departed, we worked with Amanda and Sandy upstairs, and they were more than helpful in getting everything done. I know the audit was a little later than normal, but with the turnover and everything with CARES funding, everything is buttoned up. And then we were just upstairs having some really fun conversations about 2021 and how that audit is going to go. And so we'll be digging into that here in the next short while. So any questions on anything?
We realize, you mentioned the CARES funding, we also realize that somewhat is a moving target because they're still adjusting those rules and so forth. So
Yes.
I know that takes a lot of diligence on your part to stay on top of that.
Yeah, and there is, we do get a lot of questions of, hey, can I spend my money here? Can I spend my money there? And the trouble is the changing guidance. So kind of our guideline to our clients is to say, hey, if you're going to spend it and you've decided that it's in accordance with the rules, get the rules as they sit today and kind of pair that documentation with your expense. And then if the rules change later, then we'll deal with it at that point. But at least you're showing, here's why we made the decision, and kind of stepping through that. We've got a whole team of people at iBailey that they dig into those rules much deeper than I do. So if you do have a question, you can funnel it right to us, and usually we can get a pretty good answer. A lot of that has to do with a little bit of a risk tolerance. If you were thinking about your personal taxes, sometimes people deduct things that other people aren't comfortable with, and this funding is a little bit like that, but there's just a lot of minutia with it.
You talked about the complexity even of your report and so forth, and might not be germane, but we all sit on other various boards. We got different committees and boards. We sit on other joint powers groups too. And again, the term you talked about, the first page is here, that this is an unqualified audit report. And what I have always approached it from the standpoint that I don't have to understand all 85 pages of this, as long as I can read the first 2 pages and it says unqualified.
Yes.
It's all good.
That
Thank
is
you
your
for
job.
reviewing that with me.
Yes. That is my job to know it.
Yep.
Yes, exactly.
And Amanda's too. You have to.
Amanda's got to get it ready for me, and then I got to make sure she's good. So, no pressure.
Acknowledge and appreciate the level of knowledge that it takes in your part and dedication. We do. Be lost without it.
Yeah. If you ever want some GASB standards to read, I can send them your way, and you can have some good bedtime material. I'll put you right to sleep.
Mr. Chairman? Jamie, on page 1, we need to change the term dates for Commissioners Nath and Wildermuth. It's 2022 instead of 21.
I noticed that too.
Otherwise, they wouldn't be sitting here.
So since this was as of 2020.
There's still 2022 expiration date.
Yep.
though.
So, but this has been finalized.
Oh, okay.
So we'll
not
make
gonna
sure we note it for next year. So what we'll do for 2021 is we'll draft it, and then however you want to review it or disseminate it to review it, we can
Okay.
definitely make those changes. Yep.
Sounds
So
good.
good to keep notes and.
Great. Is there anything we have to do with the CARES Act money at this point? Should we be sending a letter to the school, let us know how you spent the money we gave you, or should we go
So
down
did
that
that
road?
just happen? Was there any additional money that was given to them in 2021? No. So then I would say no.
Okay.
It's just kind of a one and done. You spent it in 2020. We tested it in 2020. If you do have those situations in the future, then something should be put in place to say, hey, let's do some subrecipient monitoring here.
We had a small grant in 21 that came through the state that we used for basically it was like 250,000 somewhere in there that we used for helping our restaurants
Right.
and bars.
Yeah, so
that was a
those-
state money, but
So those
we aren't
wouldn't
going back. I
qualify.
mean, they were pretty small
Yeah, and those, if they go to like a private entity or like a nonprofit, those are considered beneficiaries.
Okay, they
Because
were.
they don't have the same type of reporting. The only reason these were issues is because you gave it to another government.
Right.
And the governments have that reporting issue.
Yeah,
So
so
if it went to like restaurants, there
Okay.
you wouldn't have any
Yeah, and all
requirements.
three of our school districts that, have ties in the county got money
Yep.
through the CARES Act, which you saw, so, okay.
Yep, so those were the three
Okay,
that came up.
good to know.
Yep.
Thank you. And thank you for all you guys' work on this too, and our turnover and all of that,
course.
and I'm trying to help a little bit, and thank goodness Amanda's here now, but working with your staff and everything through this, you guys do a great job, we appreciate it very much.
Excellent. Well, we appreciate working with the county. It's always been a fun one. Our team, when they come on site, they have some fun, and they played basketball at a court here, and so the kind of the running joke in the office is who's going to Pipestone so we can have a basketball competition. So we've got good memories too.
I do have kind of a personal question too, when we talked about the turnover, of course, our turnover here, and again, the other boards that we sit on. When we see turnovers on our other joint powers boards that we're on, again, as long as we got an unqualified audit report, we don't have to have like a handover if that director leaves halfway through the term. There's no need to have a specific audit because of his or her departure.
No, the only reason you would maybe want to do something like that is if the individual entities had like a policy saying they wanted to do something like that. It's not required by state statute or anything like that, though.
But generally, again, our fiduciary duty for oversight for that we are fulfilling our obligation by still having the audit report. We don't have to have a special audit for handover.
Yeah, no,
Okay.
yep. I mean, if there ever are concerns, we can definitely look at some of that stuff. But no, you don't, there's no requirement for that.
Any other questions for Jamie?
Excellent. Well,
Thank
thank
you
you
very
very
much.
much. Have a good day.
Did she bring her basketball shoes with her?
I didn't. I should have. Although I don't think the weather's good enough for a basketball game today, and I have no basketball skills.
Okay, what are your wishes? You wanna adjourn or do reports?
I would like to hit the road.
Yeah,
If it works
do
for you
reports
guys.
next.
Yep.
Okay,
I do have a quick question for Steve, though. You gave us a copy then of the city's public hearing. This is just for information only.
Yes.
The city's tomorrow's having, there's no need for
Just
us to
threw it in your box,
participate.
just status of where it's at with their
Okay,
plat that they're working on. I thought you might wanna
yep.
see what's going on with the Hill School. That's the only reason I threw it in there, so no action required on the board's part, it's information only.
Steve.
entertain a motion to adjourn.
So moved.
Second.
We stand adjourned.
Guys.
Thank you.
Full morning. Your fingers tired?